Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 4 o'clock in New York on Tuesday, the second day of April 2014, and this is the daily report for gold and silver. Although we had a mixed bag yesterday, we've got all green and solid green today, with gold trading up approximately $10 on the day, $12.8972 as you can see on the screen. We have silver up about 21 cents at $20.07. More on silver towards the end of the show. In terms of gold, the low has been $12.8060, the high $12.96. In silver, the low has been $19.68 and $20.27 on the high. Interesting, we're just off the highs on gold, and we're looking at a 320-minute chart. If you recall from yesterday's show, we talked about the fact that when we looked at different fib levels, the most critical levels really to look at are the 38 and 61. And we are just right back to that 50%. That 50% retracement level, I believe, comes in around 92. But we also said that besides these fib levels, there's other things that we do look at for support and resistance. And if you recall, this is the chart from yesterday. I put up two basic lines. I put up this line here, and this line here, of course, represents this top here. And I also looked at this top right here, and we put up this line. Let's go ahead and put that in. And so, as you can see, the market did absolutely come down, and then when it came down, it seems as though it just dipped right below there and is now moving back up. So it's just below the 50%. In fact, let's go ahead and put that in. So as you can see, I've gone ahead and added back the 50. Now, the 50 is not as critical as these two, but we have to watch where the market is and react accordingly. In fact, we have a most interesting pattern that is unfolding on our daily charts that I kind of want to talk to you about. But here's the thing. We have the jobs report coming in on Friday. We have the comment made by Yellen on Monday. All of that kind of interacting with the marketplace itself. It is expected, the first reports I've gotten out is the expectations around 200,000 new jobs. If it comes in on target, that's a pretty strong number in comparison to what we've seen, and that could actually be bearish for gold. Now, if it comes in off expectations, of course, that's going to have a different reaction. But what I find most interesting in terms of today's market, really more than anything else, is a Japanese candlestick pattern simply called meeting lines. Let's go ahead and pull up a daily chart. So, as you can see, I have pulled up a basic daily chart, and what I want to draw our attention to are these last two candlesticks right in here, yesterday and today. And basically, the definition of bullish meeting lines is you have a defined downtrend. As you have that defined downtrend, you get the market opening well below. You have this down day, but then during the day, it begins to trade up, and you actually have the close of the prior day and the open of today kind of meet. And so in this case, you would have what's called meeting bullish lines or bullish meeting lines. And this is a basic illustration of it. I've kind of brought it over. And so this is the textbook case of bullish meeting lines. Now, the interesting thing about that is that when you consider the different types of variations you can get, not on bullish meeting lines, but on different pivot points or pivot candles. Meeting lines is simply where you've got this market, you've got the open from today and the close of today at the same place. Now, if this candle, and let me try to draw this in. In fact, let's go ahead and thicken the candle up to make it easier to draw these examples. So that would be basically your bullish meeting lines. Now, the next variation that you can get is simply called an on neck. An on neck comes right to the open of the close, of this particular day has got to be above the close of the prior day, but it's not quite what is called a piercing line, because for a piercing line, you can see on a piercing line, you would have it effectively go to the midpoint. So this would be the second type of variation you get on these two candles. The third type of variation that you would get on these two candle types would be basically a piercing line. So you've got meeting lines, you've got on neck, and then a piercing line, as best as I can, is simply where the candle itself, the close, is at or above the midpoint of the prior day candle. We'll say that that's the midpoint, for example. And so that would be a piercing line. And then there is yet one more variation for this kind of bottom formation, and that is a engulfing bullish. So this would be your basic engulfing bullish. In other words, an engulfing bullish, it opens below and closes above. It engulfs the entire trading range of the prior candle. We're looking at a daily chart, so it would be the prior day. Now, the interesting thing is that no matter what you get in terms of whether it's meeting lines, an on neckline, a piercing line, or engulfing, you do want to wait for a confirming candle so that the pattern would unfold really something like this. You have the market, defined downtrend, it finds support, begins to trade higher, you get that classic V or pivot reversal. If it does it with, this would be a piercing line, you would take the call on the following day. You would want to see a green candle with a higher high and a higher low. If it's engulfing bullish, you're going to have the same criteria, of course, for taking that call, and that criteria is the following day higher high and higher low. And the same with meeting lines. Now, in terms of the absolute strength of these different types of pivot points, the strongest, of course, is going to be your engulfing bullish, and your weakest is going to be the bullish meeting lines because they haven't even traded into the prior trading range. Now, as you can see on our daily charts, this being the cash market, we're forming a new candle which is going to form right here. And so it's really going to be determined by whether or not, of course, we see this candle here begin to trade higher. And that would be the confirmation needed to actually take that call, and that would actually trigger a buy signal. Now, we did not see this market rest eloquently on any fib retracement point, and we have to point that out. But this isn't an exact science. We always don't get that, one. And two, we might be in a scenario in which we haven't completed this particular downtrend. We get these bullish meeting lines, takes us up a little bit, and then kind of comes here, and then we get our final kind of washout. So, in terms of the marketplace itself, we are still going to remain neutral in the market. We've got a whipsaw possibility coming in on Friday with the jobs report. You know that always has the possibility of having some pretty strong gyrations in the market, and we will have to absolutely see how this pans out. But the one thing that I can tell you is that for the first time in the last few days, realize that this downtrend has been for 5 days, but it's really been a little bit longer when we look at this daily chart. 5 sessions, yes, because we've had a couple of up sessions, but if you consider 1, 2, 3, 4, 5, 6, 7, 8, 9, out of the last 10 trading days, 7 of them have been red candles or lower closes, compared to 3 of them being green candles, and the green candles are not even that strong of green candles. We're not really seeing the kind of activity that to me is indicative of a market that has been bottoming and is looking for a key reversal. However, we have seen some signs. We pointed those signs out. Now, we looked at that one particular top on a intraday chart, just to kind of show you where that top comes from. This is on a daily chart right here. It's this high that we're matching it with. So, again, we have the possibility of finding support, although we did not find support at a 61% retracement, and we absolutely barreled through a 50% retracement. And this is, of course, of this entire rally, and that's what's really important. We have broken it down, but when I break it down, I'm really looking more for harmonic. So we're going to see the market, whether it comes here and then moves up or continues lower. I believe that this would be the bottom and then moves up. Somewhere within this area, we should find a potential bottom in the market and begin to see the market trend higher. So what are we seeing in silver? Interestingly enough, in silver, we have a variation. And the reason I'm saying variation is you can see that this open is just above the close of the prior candle. So you can't call it a pure engulfing bullish, but it's very much engulfing bullish-esque is what I would say, just as this is engulfing bearish-esque right in here. When you look at the spot market, you're not, because it's a continuous contract and it trades 24 hours a day, you're not going to get something below. So the best you're going to get is at, this is at and plus one tick is the way that it looks. So we got bullish meeting lines in gold. We got an engulfing bullish in silver. Let's see if we get confirming candles tomorrow, because that's what it will take to actually trigger some sort of a signal. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow on Thursday for another daily update and review. Bye-bye.